What's poppin', everyone? It's Scout Eveleth here, bringing you another awesome video. And in today's video, we are going to be talking about closing costs when you are buying or selling a home here in the Villages. So whether you're thinking about buying or selling a home soon or in the future, there's going to be something for everyone here today. Even though this video is geared towards the Villages, if you are planning to buy anywhere in the state of Florida, most of the information we're talking about today will be relevant, but just keep in mind there may be some slight differences depending on where you're looking. Now, before we get into that, I am a licensed realtor here in the state of Florida, so if you're thinking about buying in the Villages or just wanting to stay up to date on everything that's happening in the biggest and best retirement community in the world, make sure you're subscribed to the channel so you don't miss out. I post new videos every Monday at 5 p.m. Eastern Standard Time, and if you're seeing this video and realizing that it's not Monday when it came out, it was actually my girlfriend's birthday this past weekend, along with the holiday, so we had some things going on, and I didn't want to rush the video out. I wanted to make sure that it was a quality video, so hopefully you guys can forgive me on that, and going forward, I'm going to do my best to make sure that they're out every Monday at 5 p.m. Eastern Standard. Also, if you enjoy the video today, make sure you smash that like button. It helps promote the video to more wonderful people just like yourself and really truly helps out the channel. So with all that said, thank you so much and let's get right into it. Now, it should come at no surprise that deciding to buy or sell a home is one of the biggest financial purchases that most people will ever make. So in today's video, we're going to be breaking down one of the major components of that, which is going to be closing costs. We're going to be covering what closing costs are, who's charging them, what they're being charged for, and how you may be able to save a little bit of money on some of these costs. By the end of this video, you'll have a much better understanding for what closing costs are, so that way you can feel more confident with your next home when you're buying or selling. First, let's talk about what closing costs actually are, because sometimes I hear this term used a little bit loosely, so let's start by defining it. To put it simply, closing costs are charges or fees when you buy or sell a home that do not include any type of money down or down payment. There are many people involved in helping you buy or sell a home, and each of these people charges a fee that ends up being a part of your closing cost. This would be people like your lender, the title company, real estate agents, you'll have insurance agents, home inspectors, appraisers. Sometimes you may have attorneys that get involved or home warranties, depending on what's going on. The county will also be involved. They have charges that are in place, and the Villages, which we'll break down more in depth a little bit later. Now, depending on how you plan to buy, using cash or with a mortgage, your closing cost will end up being very different depending on how you go about it. For example, many lenders are going to require an appraisal be done. Usually a survey will need to be done as well as a home inspection. However, if you are purchasing with cash, these items are not necessarily required and are considered optional. So you may be able to save some money on some of these services depending on what you do and don't need. So let's talk about closing costs more in depth. That way we can have more of an accurate comparison for what is required if you're using cash or what's going to be required if you're using a mortgage. The first item I wanted to address is going to be the down payment. Now, this is not technically a closing cost, but I wanted to make sure that I addressed it. Also, just to make sure nobody's confused, the down payment is not going to be the same as the escrow or good faith deposit. So just keep in mind that those two things are different, and we'll be covering the escrow deposit a little bit later. Now, the down payment is going to be a percentage of the purchase price, and this is normally a requirement with your loan, depending on which type of loan you're using. So if you're using a conventional loan, it's normally going to have a 3% down payment requirement. An FHA loan is going to have 3.5% down payment requirement. And for VA and USDA loans, these can have 0% for the down payment requirements. So just keep in mind, depending on the type of loan you're using, will dictate how much money is going to have to go for the down payment. Now, the second item is going to be the lender fees. This is a part of your closing cost. This covers the lender's review of the application and verification of income, along with some other administrative items as far as underwriting the loan and scheduling the appraisal. This fee is usually between 0.5% and 1% of the loan amount and will be paid as part of your closing cost. This is sometimes referred to as an origination fee as well, and some lenders do offer home loans without an origination fee, but I would be very careful of that because this origination fee is the main way that the lender makes money. So if they're offering home loans without this, there's probably some hidden fees or maybe adjustments to the rate going on. So just be very careful of that if you are doing your price shopping or comparisons. Now, the third component is going to be fees that are charged by the title company. Now, the title company does quite a bit of things throughout the real estate transaction. They're going to look through the property's history as well as issue a owner's title policy, and they'll normally schedule and facilitate the closing as well as act as an escrow officer holding the escrow or good faith funds and record and process any paperwork that needs to be done, usually at the county level. Now, the fourth item that is going to be a part of the closing cost is going to be the realtor fees. Now, here in Florida, the seller usually covers the full real estate commission for the buying and selling agent. Now, how that works is half of the commission goes to the listing agent. This is for marketing and selling the home, and the other half is reserved for the buyer's agent, who brings a buyer and ultimately helps connect and facilitate the transaction. Now, there have been some changes recently in real estate, and I plan on making a video on that at a later time, so I won't be discussing it in too much detail here today. But this is how it's worked up until this point historically, so this is how I plan on seeing it work, at least in the near future. And that brings us to the fifth component of the closing cost, which is going to be your homeowner's insurance. Now, your homeowner's insurance is going to protect your financial interest in your home if it is damaged or destroyed by a covered event. This could be something that causes injury or loss, or more commonly, it's if the home is destroyed due to fire, hurricane, natural disasters, things of that nature. Now, a quick side note is going to be if you're planning to use cash or if you own your home free and clear, homeowner's insurance is not actually a requirement in the state of Florida. If you're using a mortgage or have any type of loan against your home, it will be required, but again, if you're using cash or if your home is free and clear, you do not have to have homeowner's insurance. Now, me personally, I would, but just so you're aware, that is an option if that is a risk that you are willing to take. Now, that brings us to number 6, which is going to be your home inspection. Now, lenders typically require a home inspection, and this is to make sure that the home is livable and structurally sound. And you can expect to pay anywhere from $300 to $500 for a standard home inspection, but this is going to vary slightly depending on the size of the home and the area that you're looking in. Now, you typically get to choose your home inspector, which is pretty cool. And if you have a good home inspector in mind, that's great. If not, be sure to ask your realtor because they should have at least 1 or 2 good recommendations for you. And when the home inspector comes out to inspect the property, you'll normally pay them right then and there. That is one of the upfront closing costs that you will have to pay. I always recommend my clients get a home inspection, especially when you consider that you're buying something that is worth hundreds of thousands of dollars. So paying a few $100s is not that much in the grand scheme of things, and it is some of the best money that you can spend when you're purchasing a home. Now, if it were me, I would actually pay a bit extra here to get a full home inspection, and this is going to cover your standard home inspection, you'll have your 4-point inspection, wind mitigation inspection or report, and your WDO, which is your wood destroying organism inspection. Your 4-point inspection and your wind mitigation report are going to be required if you're using a lender, but again, if it was me personally, whether I was using a loan or with cash, I would go ahead and get these as well as the WDO, which is your wood destroying organism inspection. It's well worth the money, and when you order all of these together, they'll normally bundle it and give you a discounted rate for all of them. I have an inspector, and I believe he charges about $550 to do all of these for you. And again, it is well worth it. Having these will give you much more peace of mind. It's a much more thorough inspection when you're purchasing something that costs hundreds of thousands of dollars. And having these reports can actually save you money on your insurance as well. So there's really a lot of good benefits. And again, if it was me personally, I would go ahead and just get all of them. This brings us to the 7th item, which I'm going to call the transaction fee. Now, I'm saying it like this because for the real estate transaction, there will sometimes be some small miscellaneous charges for various things. So this is a term that I'm using to bundle and encompass all of that into one. This would include things like error and omissions insurance, retaining all necessary documents for the 5-year minimum, if there needs to be any checks or documents overnighted, faxes that are going back and forth, if you have wire transfer fees or other miscellaneous fees. Again, these normally add up to be anywhere from $300 to $600, I would say, depending on who is doing what. But this just gives you a good idea for what you can expect for a lot of the smaller miscellaneous fees. The eighth item is going to be the appraisal fee. If you're using a loan, you're going to need an appraisal. This is something that the lenders are going to require, which will give them an estimated value of the home before they are willing to give you a mortgage to be able to purchase it. It's a one-time fee that is also paid up front, so it's usually non-negotiable, unfortunately, but this ranges anywhere from $300 to $600. Again, this is depending on the home that is being appraised as well as the area that it's being appraised in. This brings us to the ninth item, which is going to be the county recording fees. This is going to be for the local government when they are recording and updating the deed as well as the mortgage that is getting filed with them. These costs are pretty minimal overall, but it is an additional cost that the county has to pay, and so they normally pass these charges along to you. The 10th item is going to be attorney's fees. Now, involving an attorney in a real estate transaction or seeking legal counsel if you are purchasing real estate is totally optional in the state of Florida. I know in some other states it is required, but here in Florida it is totally optional. However, if you are wanting legal review of the real estate contract, or if you are working on putting the property in a trust or having some complicated things going on, it may be wise to involve an attorney, but for the most part, people choose not to get legal representation, but that is totally up to you. Now, the 11th item is going to be the home warranty, and this is totally optional, similar to involving an attorney, and I think it's pretty case by case if you should get this or not. If you do get one of these, this will be considered part of your closing cost, and sometimes you can actually have the seller pay for a home warranty, depending on what's going on. But for the most part, like I said, it's kind of case by case. Sometimes I recommend them, sometimes I don't think they're needed. They normally cover quite a bit, and the cost is usually about $600 for when we have to pay for them, and we get them at a reduced rate, being realtors. Now, the last item is going to be very unique to the villages, and I would call this the villages prorated expense. Now, how this works is the villages will normally take a proration of all the fees that end up being charged, usually on a yearly basis, and prorate it down to that month, and then they collect a full amenity fee charge from you as well. And I'm not sure of the total math behind it, but I know that it usually totals to be less than $500, and they'll go ahead and apply it. And if anything needs to be returned as a credit back to you, it ends up happening, but usually they will charge you about $500 up front, whether you're buying or selling, just to make sure that these fees are covered and paid for. And then again, if any adjustments need to be made later, they go ahead and credit it back to you. Now, another item we talked about earlier that is not considered a closing cost is going to be your escrow or your good faith deposit. This is money that is due up front, and it shows that you are serious about this particular home that you're interested in when you find one, and it helps the seller because they're going to end up taking their home off the market. So this good faith deposit shows that you're serious, and it helps entice the seller. Sometimes can sway them a little bit if they have multiple offers or if you're trying to win them over, but just be aware this money that you put in the escrow or the good faith deposit may be subject to collections depending on what happens with your real estate contract. So be mindful of that. But as long as you're communicating with your realtor, they should know what they're doing, how to handle it, where the money should not be in any type of jeopardy. But just so you're aware, that is how it works. And if worst came to worst, this money could be subject to collections. Now, your good faith deposit is going to show up as a credit when you get your closing statement. And I'll explain this more in just a moment. But on your closing statement, which is a document you get typically a few days before you close, it will have all of your charges listed on there, and they will be itemized out individually so where you can clearly see them, and you'll see that your escrow deposit is on there as a credit, so it's less that you will have to end up paying. Now that we understand a little bit more of some of the closing costs, this brings us to another important term, which is going to be your cash to close. This is the best way to think about your cash to close so you can fully understand it. If you take your down payment amount which is how much you are obligating to put down if you're using a loan, and you add your closing costs together, any adjustments or credits that you are meant to receive will be subtracted out of that, and this will give you your cash to close. For example, if your down payment was going to be $20,000, and let's say your closing costs are going to be $9,000. So if you add those two together, 20,000 and 9,000, it will give you 29,000. And if there were any adjustments or credits that were to be made, let's say in this case it was $5,000 worth of adjustments and credits, you subtract that out of the numbers that you just added together. So you take 29,000, which was the cost again of your down payment and your closing cost. You subtract out any adjustments, which would be $5,000 in this case, and that brings your balance to close, or your cash to close, is needing to be $24,000. This cash to close amount is going to be the final amount you need to purchase and close on your new home. Now, if you're using a loan, your lender will usually provide you with what is called a loan estimate within 3 days of your application. This is going to give you an upfront estimate of what your closing costs are going to be. However, as you move through the transaction and the amounts get finalized, because in the very beginning, the lender is just estimating or guessing to the best of their ability what these items are going to cost. So as you move through and get closer and closer to closing, these will get finalized and you'll have a more accurate number for what your cash to close is going to be. So once you get right near the very end, within 3 days of closing, the lender is going to provide you with this closing statement, which again will show you all the itemized charges that are going to be the debits and credits on here, so that way you know exactly what your cash to close amount is going to need to be. So now that we know a little bit more about closing costs, who's charging them, how they work, what can we do to try and save a little bit of money or help lower our closing cost? To help lower your closing cost, my best recommendation is to try and get a seller credit or possibly a lender credit as well. A seller credit or seller concession is when they agree to pay a portion of your closing cost, and depending on the state of the real estate market, this may be more or less common depending on how competitive it is. Lender credits can reduce your closing cost, but will usually have a higher interest rate to make up for this, so just be very careful. This is not my first recommendation, but if you are really tight and trying to make the deal happen, this is a possibility for you, just so you know. Another strategy to help save on your closing cost is going to be shopping different lenders and different home insurance agents. Each lender and home insurance agent is going to be pretty different in terms of what they offer and what they are willing to cover. So make sure you shop around. It is a little bit time consuming, but most of the time, if you're willing to put in a little bit of effort, you can actually have some pretty good savings if you're willing to do it. So once you make it to the very end and you're almost done with purchasing your new house, remember, you're going to take your down payment and your closing cost. You're going to add both of these numbers together, and this is going to be your cash to close once you subtract out any adjustments or credits that are necessary, and this amount is going to be due in full at the time of closing. This is usually paid with a wire transfer. Most title companies are not going to accept a cashier's check, personal check, or any other form of funds to be able to close on a home. Just a quick reminder, the fees for the appraisal, the home inspection, and the good faith deposit are due up front. So they are considered closing costs, but they will not be on your balance to close because these will already have been paid. Also, it's worth mentioning that different loans are going to have different fees that are associated with them, so this is going to affect your closing cost as well. For example, FHA loans usually have an upfront mortgage insurance premium, VA loans are going to have a funding fee, and USDA loans are going to have a guarantee fee. Also, these fees are usually just added to the loan amount rather than being paid up front. So now that you understand more about closing costs, here is a good way that you can estimate how much you're going to end up paying depending on if you're using a loan or using cash. If you're using a loan, a good rule of thumb is that you'll probably pay anywhere from 2 to 3% of the purchase price in closing cost. If you wanted a more detailed estimate, be sure to ask your lender or use an online loan estimate calculator, and it'll help break it down more for you in detail. Now, if you plan to use cash, then you'll be able to save quite a bit on lender fees as well as upfront mortgage costs. You may have some extra savings as well if you opt to not get an appraisal, survey, or home inspection, since they would not be required using cash. Now, if it were me, I would be okay with not getting an appraisal or a survey. However, I would get a home inspection because I truly believe it is some of the best money that you can spend when you're purchasing a home. So if you're using cash, I would expect to pay 1% or less of the purchase price, and this should be a pretty good estimate for what your closing cost will end up being. So there you have it. Closing costs may seem a bit complex, but understanding what they are and how to manage them will hopefully make the process a lot smoother for you going forward. And hopefully you learned about some ways to also save a little bit of money depending on how you're planning to purchase or some things that may or may not be required. If you have any questions, be sure to leave a comment down below, and I'll do my best to make sure that I get it answered, whether it's related to closing costs or real estate in general. I'll make sure that I do my best to get it answered, and I try to respond to everybody who leaves a comment on the video. So with that said, thank you guys so much for watching until the very end. I hope you learned something valuable in today's video, and be sure to smash the like button if you haven't done that already. It really helps out the channel, and I do truly appreciate it. But thank you guys again so much for watching, and until next time.